Dollars and cents segment, the average home value in the Seattle area sits just below $850,000, according to Zillow. That's down about 2% over the past year. If you're in the market to buy a home, you'll likely need to take a mortgage out to make it happen. So what should you know before you start that process? And what should you do if you're thinking about refinancing? To answer all those questions, we brought in financial advisor Adam Powell with the Private Advisory Group out of Redmond. He's down in the Arc Lounge with Steve. Welcome to Adam.
Yes, welcome to Adam indeed. So talking about mortgage rates and interest rates, some real exciting stuff, but very important.
They are.
They are. And we have to talk about kind of where things stand right now. So the 30-year fixed rate mortgage average hovering around 6.2, 6.5%. When you're talking about that, when you're talking about current interest rates, we know a lot of people are sort of staying put right now, so they're not, putting their homes up for sale. Is that why? Because the rates are where they are?
Yeah, absolutely.
Okay.
There's actually a name for it. I believe they call it the mortgage lock-in effect. People are just locked in. And really, there's some history behind this of how we got here. And it's not the first time this has happened, but 2020, 2021, rates were at like once in a lifetime low. I mean, 2.5%, 3% home mortgages, and millions of people got into those rates. And now they're more than double. You just shared some stats, 6.2 to 6.4% is kind of the current average today.
Yeah.
So people that have a 2.5%, 3% mortgages, they look at themselves and say, why would we ever move? Why would I go adopt a rate twice as high?
Right.
And so, yeah, they're locked in. They are where they are. Now, those that, fast forward to 2023, rates peaked almost 8%. And millions of Americans got those rates as well because people were buying homes. They had to live somewhere. And they've retracted back now to 6.2, 6.4. It's those individuals that bought at the peak that are looking at maybe moving or selling because to them, there's not much difference in the numbers. It might actually be a slight improvement. But for the millions of Americans that bought in 2020, 2021, they're not going to go anywhere.
So when you're talking about, 8%, 6.5%, 2%,
yes,
will it ever get down to that 2% level again? And how long does it take to see that sort of fluctuation happen?
Yeah, I mean, the 2.5%, 3%, they call it once in a lifetime.
Yeah.
So are we
Maybe
80
not.
years away? Maybe not,
If I'm alive around
Right,
then?
exactly.
Yeah.
So how things are looking now, just with economics and the volatility that we have, I think the rates that we have are here to stay for a while, if not potentially a slight increase.
Okay. When you talk about that lock-in effect, are we starting to see that loosen a little bit, or where does that stand right now?
We were. I mean,
Okay.
the early data for 2026 was showing it loosening just a little bit. But now with current world events and so forth that are happening, they may actually be slowing down once again, this lock-in effect, just kind of being stale, holding in for a while.
For a homeowner that's maybe kind of on the fence about this, and maybe they're looking at refinancing, for example, because of rates might being lower, what sort of things do they need to take in consideration for that when doing that?
I think the best rule of thumb is you should have at least an improvement of 1% in your rate before you even begin thinking about refinancing.
Okay.
Because what people tend to forget is that when you refinance, there are closing costs that are associated with it. And they can be anywhere from 2 to 4 to 5% of your overall loan value. So you have to work the numbers. Find a mortgage lender, a financial advisor that can run the numbers saying how many months or years will it take to actually get a savings from refinancing. And keep in mind the refinancing rate sometimes can be a little bit higher than a new mortgage rate. We're sharing numbers of 6.2 to 6.4. Refinancing rates are showing anywhere from 6.8 to 6.9%.
Wow.
So again, careful of the flashy numbers that you might see in an advertisement because it may not be applicable to your exact situation.
And we know that one thing that people have to think about is the potential impact on your credit score too when you look at refinancing. What type of concern should that be, and what should people think about?
I think it should be a very minor concern.
Okay.
If the impact to your credit score is a thought process, set it aside. And the reason why is that it's called a hard inquiry, is what the industry calls it. When you go look for a loan or go shopping, the mortgage broker lenders can look at your credit score. That will lower your overall score 5 to 10 points. So not a huge impact. And you have this window, what they say, from like 14 to 45 days, which I do encourage. People should go shopping for the best rate. And those multiple inquiries are not going to hurt your score if they're done within that window of time. Steve, really the biggest impact to somebody's credit score are late payments and carrying a lot of debt.
Okay, so you got to be concerned about paying those credit cards off on time, for instance, and paying those bills on time.
That's the real day-to-day concern.
Okay, so get those bills paid on time. Thanks for the advice this morning.
My pleasure. Thank you.
Certainly is an uncertain housing market, but guys like Adam will help us out.
Always good advice. Just breaking down those complex topics for us.
Very complex, yes,
I feel
but
ready
important.
to go get a house now.
Yeah.
Thanks, Steve.